Assalamu alaikum. In this video, I am going to talk about accounting for admission of a new partner. First, I will explain the methods used to record partnership changes when a new partner is admitted, and then I will explain the rationale behind the Goodwill method in accounting for changes in partnership. There may be three different situations when a new partner is admitted to the partnership firm. In the first case, no bonus or goodwill will be allocated as the fair value of assets invested is equal to the book value of capital interest acquired. In the second case, the fair value of assets invested is more than the book value of capital interest acquired, and the difference will be allocated to the existing partner's capital account, or the assets of the business will be increased by the difference as goodwill. In the third case, the fair value of assets invested is less than the book value of the capital interest acquired, and the difference will be recorded in the new partner's capital account as bonus. There are two methods of recording admission of a partner: bonus method and goodwill method. In bonus method, assets are increased by the amount of the assets invested by the partners being admitted. Any difference between assets invested and credit to new partners' capital account is adjusted to capital accounts of other partners. This means that the capital balance of existing partners may increase or decrease because of admission of the new partner. If goodwill method is followed by the partners to admit a new partner, then the investment by the new partner is recorded on the basis of the difference between the value implied by the amount of consideration and the values reported in the partnership books. Let me explain you what it means. If the existing partners agree to give 25% of profit to the new partner on his investment of 100,000, then the implied value of the partnership is worth 400,000. Learning comes more and better by example, so let's take an example. There will be two situations when no bonus or goodwill will be allocated to existing partners or new partners. Number one, the new partner do not bring anything in the firm, rather he acquires share in the partnership by paying to the partner or partners outside the partnership firm. The new partner invests in the partnership firm, but his investment is recorded without recognizing goodwill or bonus. Let us take an example to understand it more. Nabia and Abdullah are partners in Sara Accounting Consultancy Partnership Business. Their respective capital balances are 71,000 and 41,000, and they share profits and losses equally. Now, since the partnership firm is facing financial crunch, they decided to admit a new partner, Samina, to the partnership. Prepare the journal entries to record the admission of Samina into the partnership under each of the following conditions. Now, the first condition is that Samina acquires 1/4, that means 25% of Nabiha's capital interest by paying 30,000 directly to her. In this case, the new partner Samina do not bring anything in the firm. Rather, she pays to Nabiha outside the partnership, and Nabiha gives 25% of her capital. So, Samina's capital will be 17,750, and after the admission of Samina, Abdullah's capital will remain the same, 41,000. But Nabiha's capital will reduce by the share she has given to Samina, and this will be equal to 53,250, and Samina's capital will be 17,750, although she has paid 30,000 to Nabiha. Let us look into another scenario, and in this case the new partner Samina do not bring anything in the firm. Rather, this time she pays to Nabiha 25,000 outside the partnership, and Nabiha gives 1/5 of her capital. So 1/5 is 20%, and that is 14,200. Samina also pays 15,000 outside the partnership to Abdullah, and he agrees to give her 1/5 of her capital, so that is equal to 8,200. So Samina gets 14,200 from Nabiha and 8,200 from Abdullah, and that's how Samina's capital is credited by 22,400. After the admission of Samina, Nabiha's capital is going to reduce and it will be recorded as 56,800, and Abdullah's capital will be 32,800. Samina's capital will be 22,400, although she has paid 40,000 to the two partners. So this completes the explanation of the first scenario when the new partner pay the partners or partners outside the partnership firm. Let's look into the second scenario when the new partner invests in the partnership firm but his investment is recorded without recognizing goodwill or bonus. Now again here we see that we have now three partners, Nabiha, Abdullah and Samina, and they have been operating Sara Accounting Consultancy Partnership business for several years. After an extensive review of their past operating performance, the partners concluded that the business needed to expand in order to provide an adequate return to the partners. The following balance sheet is for the partnership prior to the admission of the new partner, Amir. So the assets are cash and other assets, and the total is 1 million. The liabilities and the old partner's capital balances are there, and that's how the balance sheet looks like. Remember, they are sharing profit and losses in the ratio of 4:4:2. Let us see how we record the admission of Amir to the partnership firm. Well, Amir is going to invest sufficient cash to receive 1/6 of capital interest. Now we know that this is the capital of the existing partners, and the total capital is 700,000, and this is 5/6 of the total capital. So the total capital is 840,000, and we subtract the capital balances of existing partners, and that's how we get Amir's investment as 140,000. We can verify if this calculation, the total capital is for 840,000 and Amir's capital is 1/6, so 140,000. The journal entry to record the investment by Amir is as follows. Cash will be debited by 140 and Amir's capital account is credited by 140, and don't forget that we have done it without recognizing goodwill or bonus. If the fair value of assets invested is more than the book value of capital interest acquired, then the difference will be allocated to the existing partners either as bonus or goodwill. And let me explain you this. Now, in this situation, the new partner suppose agrees to invest 100,000, but his capital will be recorded as 80,000. So the new partner is allotted less share than the actual investment. This can happen in a situation when partnership business is earning higher rate of profit than other firms, or the assets of the firm are undervalued, and the difference in this case of 20,000 will be allocated to the existing partner's capital account either as goodwill or as bonus in their profit sharing ratio. So that's how the equation is going to be balanced. Now, let us look into another situation, and here Samina acquires a 1/5 capital interest for a 60,000 cash investment. Now, Samina invests 60,000, and remember Nabiya's capital was 71, Abdullah's was 41, and now we have a cash investment of 60, so the total is capital is 172,000. Now, Samina has invested 60,000, but she gets 1/5. So that is 20%. So she is allotted 34,400 as capital, and the difference is 25,600, and this will be allocated to the old partners Nabiya and Abdullah in their profit sharing ratio. Now let's look at the second scenario. And Amir invests 120,000 for 1/10 of capital interest. Now Amir invests 120,000, so the total invested capital is 820,000, and 10% of Amir's share is equal to 82,000. Now see, Amir invests 120 and he gets only 82. That means there is a bonus of 38,000, and this bonus will be distributed or allotted to the old partners in their profit sharing ratio. So cash is debit, that is what Amir brings in 120, and his capital is credited by 82, and the bonus of 38,000 is distributed among the three partners in their profit sharing ratio. Let's see how we record the admission of a partner if goodwill method is used in place of bonus method. Note that goodwill method is used, then the new asset goodwill is recorded based on the difference between the value implied and the value reported. Now, Samina invests 40,000 for 1/5 interest. So the total capital is 40,000 divided by 20%, that is 200,000, and we subtract the capital of the three partners 71, 41, and 40, that makes it 152, and the difference is 48,000, and this difference is recorded as a new asset goodwill. Now, prior to the admission of Samina as a new partner, The firm's worth was 71,000 was Nabiya's capital and 41 was Abdullah, that makes 112,000. So now Samina invested 40,000 and her capital account is credited with an equal value. So the firm's worth is 40,000 divided by 20%, that makes 200,000. This means that the firm's actual worth is more. You see, this is the total worth is 200 and the capital of Nabiha, Abdullah and Samina is 40. So you can see the balance is 48,000 and this amount is recorded as goodwill and this will be credited to the old partners capital account in their old profit sharing ratio. So Samina's capital is credited by 40 and goodwill is debited by 48. Now let's look into the third situation. If the fair value of asset invested is less than the book value of capital interest acquired, then the difference will be allocated to the new partners either as a bonus or as a goodwill. And let me explain you what I mean by that. Suppose the new partners or the new partner agree to invest 80,000, but this investment is recorded as 100,000, and this can happen in a situation when the partnership business is earning low rate of profit as compared to other firms, and the firm is in desperate need of money, or the new partner has some special skills that will help in boosting the firm's profit, or the assets of the firm are overvalued. And in this case, the existing partners' capital accounts are going to be reduced to give bonus to the new partner. And that's how the equation will be recorded. We are using the same illustration that we used previously, and there is no change over here. And let us see what happens if the book value acquired is less than the amount invested. Now here again we have a new partner Amir, and let us see what is the situation. Prepare the necessary journal entries to record the admission of Amir, assuming Amir is to invest 120,000 for 1/10 of the capital interest. Now 120,000 for 10%, that means the total capital will be 1.2 million. And if you can remember, Nabiya's capital was 275, Abdullah's capital was 225, and Samina's capital is 200. So the total is 700, and to this we add Amir's capital of 120, and that's how we get 820. And since the book value acquired is less than the amount invested, there is a goodwill, and let us see how we are going to record this goodwill. So goodwill is going to be debited by 380, and this will be distributed among the existing partners in their profit sharing ratio. Amir invests 120,000, so cash is debit and Amir's capital is credited by 120,000. Let us look into one more situation where Amir is to invest 160,000 for a 1/4 capital interest. Now in this case, this is example of book value acquired being more than the amount invested. Now Amir invests 160,000, but he acquires, let us see how much he acquires. This is Nabiya's capital, Abdullah, Samina, and this is the Amir investment. So the total investment is 860, and he has 1/4 of capital interest. So 1/4 is 25%, that is 215,000. Now Amir invests 160, but he acquired 215,000 capital. This means that he acquires more than what he has invested, and now he will get a bonus, not the existing partner. So 215 minus 160, that makes 55,000. Now in this case, the old partner's capital account will be debited to reduce their balances in their profit sharing ratio and in order to give bonus to the new partner. You can see cash is debit, that is what Amir brings in 160, and Amir's capital is credited by 215 because he gets a bonus of 55,000, and the old partners capital accounts are debited in their profit sharing ratio to reduce their capital balances. Let us look into one more situation. Amir invests 160,000, and now we are going to apply the Goodwill method. Now the current partner's capital account is 700,000. If you can remember, Nabiha's capital was 275, Abdullah's capital was 275, 225, and 200. So this makes 700,000. So the current capital is 700,000, and because he's acquiring 1/5, that means 20%. So we divide this by 80% to get the total implied capital, that is 875. And the total invested capital is 700 of the old partners and 160 by the new partner, that makes 860. That means there is a goodwill of 15,000. Now again, in the goodwill method, Amir's capital is increased by the amount of goodwill as Amir gets more than what he has invested. You see, he has invested 160, but he is going to get more than that, and I will explain you in a minute. Now, Amir brings in cash 160, the goodwill is 15,000, so Amir's capital is 175,000. He gets more than what he has invested, and we can verify this. The total capital is 875,000, and he has 1/5 share, so 175,000, and that is what is there for Amir. Let's take one more example using bonus method. And here Amir invests 160,000 for a 30% capital interest. Now old partner's capital account or existing partner's capital account is 700. Amir brings 160, so 30% of this amount is 258. Now the book value of the interest acquired is 258, and this is greater than the assets Amir has invested, that is 160. So the difference is going to be the bonus, and that is 98,000. Now in this case, this bonus is going to be received by Amir, and the existing partners capital accounts are going to be reduced by the amount of 98,000 in their profit sharing ratio. Finally, let's see how to record admission of the partner in Goodwill method. So we have a Goodwill method now, and 700 was the capital for 30% interest, so that makes 1 million. And remember, the current balance of the old partners was 700,000, and Amir's investment is 160, so that makes 860. So there is a difference of 140,000 to be recorded as goodwill, and this is going to increase Amir's capital because all this amount of goodwill will go to Amir. So cash is debit, goodwill is debit, and Amir's capital is credit. So this brings an end to my explanation on accounting for admission of a partner. Remember that persistent questioning and healthy inquisitiveness are the first requisite for acquiring learning of any kind. If you have any question about accounting for admission of a new partner, then please email me and inshallah I will reply you back. Happy learning. Thank you so much.